Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And if you look at the markets, we have actually given up those early morning gains. No doubt we're trying to actually claw back. As you can see on your screen, Nifty is right now around 19,380 levels. It's the Nifty Bank that was underperforming the benchmark indices. If you look at Nifty Bank, that was in the negative territory post noon. So there you go. Right now, currently trying to move the positive territory. So that's the way how the markets are looking like. But remember, it is the season of IPOs, looks like it, Vinny, and we have the management of Utkarsh Small Finance Bank joining us on the show. We have Mr. Govind Singh, who's the MD and CEO, as well as Mr. Sarju Simaria, who's the CFO at Utkarsh Small Finance Bank. Very good afternoon to you, gentlemen. Thank you so much for joining us on ET now. And let me begin by asking you about your promoters and the current investors in Utkarsh Small Finance Bank. Given the fact that you're coming out with an IPO, will they be exiting?
So our promoters are, Utkarsh Core Invest Limited, which, they hold currently 84%, and post-listing it will be below 70%. And there is no OFS in this case. So the entire issue is primary issue. So there is no question of any exit by the holding company investors because of this IPO.
Right. Also just want to understand, so what's the main object of this issue, and will there be a continued dilution going forward as well?
So primarily this is our growth capital, and for any financial services institution, capital is the basic raw material. So we will be raising this. We are raising this equity for growth capital, and based on our future needs, it's very difficult to predict when we'll require more capital. But based on our growth requirement, we may have to come to market again. And you are aware that RBI requires 15% as capital adequacy. Currently we are 20%. And so that's it. It is for basically the growth capital. At the same time, sometime it also helps in case there are exigencies, there are some issues in the market, and sometimes there are those type of challenges are also there. But otherwise, largely it is growth capital.
Right. Could you talk to us more about your loans? Given the fact that you have a large exposure to microfinance, do you plan to diversify risk going ahead?
So almost 14 years back we started as NBFC MFI, and after becoming a bank around 6 years back, we started diversifying our product and geography, because banks are expected to be diversified book. So we are seeing you must have seen the trajectory that every year we are able to reduce our exposure in microfinance and increase the exposure on other portfolio. It doesn't mean that we are not growing our microfinance book. We are certainly growing that also. But the other asset classes are having, you can say, a lower base, so that the growth rate is higher. So that is what is happening. And it seems that the trajectory will continue, because, we are growing our non-JLG or non-microfinance, verticals, on a continuous basis.
Just to add to Govindji, that while we started with microfinance business, becoming an SFB, it's important to diversify the portfolio. So while on a low base, secured book is going with a faster pace, but we continue to have microbanking as a relevant vertical, senior vertical, and we see this space to go up in the unsecured book, and as an eventual natural progression of reduction in the microfinance book.
Sarju, let's just focus back and talk about in terms of your IPO, because where do you see the price to book post the issue for your bank then?
So, at the moment we are priced to book at 1.12 FY23. We will wait for how the market, gives us value on this.
Right. And has the MFI cycle actually turned around? How will the recoveries, if any, actually shape up going ahead for Utkarsh Small Finance Bank?
So initially, when COVID struck, initial phase, especially the microfinance sector, faced a lot of challenges, because, the model operates on a face-to-face interaction with the customers. But for last 1.5 years now, we have seen a significant robust recovery of collections across, in fact. And, I'll use the word now, it is very close to normal in terms of recovery. And that trend looks like will continue.
Also, just lastly, if you could tell us, how have you managed your credit risk in the MFI sector then?
So it's this model actually is very important from the sourcing side. How you source the customer, how you meet the customer. The entire process is a little different than how you can say the way retail lending happens in urban space. So it is a little different, and the process is supreme in this case. So I think, and that's our experience in 14 years also. If your sourcing is good, your process is good, and when you meet the client for the first time, you are able to give all details to them in a robust fashion, and build them, and ensure that the right targeting segment of people are given loans. Then we have never seen a challenge in collection. Having said so, we are not forcing any major, you can say changes in the collections part or in the overall quality of portfolio going forward also. And of course, the COVID was a different phenomena altogether, but now it has come back, and we expect that this, you can say the overall growth as well as collection focus and quality of portfolio will remain there for future.
Okay, gentlemen, thank you so much for joining in with us this afternoon on ET Now. And that was the management of Utkarsh Small Finance Bank. We'll be launching its IPO on 12th of July, so keeping an eye out on that one. But let's move on and get started with all the stocks that are buzzing in trade, either on the back of these flows or technicals. On the technicals, today we're joined by Sameet Chavan, while from the research team, we have Harsh as well as Ashesha joining in with us. A very good afternoon to all three of y'all as well. And let me start with the first stock as always, Titan. That's the one that is falling in trade today. And why? Because what we saw coming in is that there's a brokerage note from where they've downgraded the stock to an equal weight rating from a previous overweight rating. They've kept the target price at 3,207 rupees per share. They see that, this outperformance that we've seen and continuing in Titan for the longest period of time, that maybe could take a bit of a pause. And maybe the high gold prices, that's an impact coming in terms of that for the discretionary consumption and the spending over there as well. Overall, on the long-term basis, they're quite positive, but they believe that in the short term, the business momentum maybe could see a bit of a slowdown in the next couple of quarters. Titan, long-term basis for Morgan Stanley still continues to be attractive, so they see more of a balanced risk-reward as of now at the current levels. But yes, a downgrade coming in from Morgan Stanley, keeping the stock under pressure like you can see, and down 2.6% as of now as well.
Right, and that is Titan for you, declining in trade today. Let's talk about Zee Entertainment then. That's the other stock that is in focus in today's trading session. We know that you had an appeal that was at SAT, and today that case was taken up by SAT, where they refused interim on the SEBI's order. Remember what the SEBI's order had, interim order actually stated that it had banned Subhash Chandra as well as Puneet Goenka from the boards of the listed companies for 1 year. Today you had SAT that refused the interim stay on the SEBI's order, but remember what SAT has also told, that they've given Puneet Goenka as well as Subhash Chandra at least 2 weeks time, where they will go have to and file a reply to SEBI on that interim order. So you saw the initial downtick on the counter, saw a sharp 5% drop, but after this particular development coming in, that SAT has given them 2 weeks time to respond to SEBI's order, you saw a recovery coming on the counter, because you have a lot of analysts say that this will not hinder the merger proceeding. In fact, let's hear actually what Karan Taurani had to say on this particular development.
So I think this is some sort of a mild negative, I would say, because in terms of relief, one would have expected a stay order, So I think this will kind of keep that SAT overhang for 2 weeks more, and that's why you are probably seeing some pressure on the stock. But nonetheless, from a medium to long-term perspective, we maintain our view that merger is going to be a big trigger, for the stock. And whether or not Mr. Goenka or the Goenka family is a part of the entity merged or not, the merger eventually will go through, and that remains to be a very high probability of the event. So I think basis that, this is more, just a time-bound correction, and I think things, should fall on track. But what this will do is that the NCLT hearing will also get pushed. So the more delay happens in terms of the SAT matter, the further will be the delay in terms of NCLT also. So whether it is 2 weeks, 3 weeks, one can't say, but it is just a delay, but not the merger getting impacted or being forward.
Okay, let's move on and actually talk about LTI. Nifty as well, and we can see it flashing on our screens as well. This one is in focus as well. Citi has come out with a note where they're maintaining a sell on this one with a target of 4,200. Now this is mainly in terms of the rebalancing that we'll see coming in the Nifty as well. So they said that Nifty inclusion is already priced in this, and that is the factor, that is what they're maintaining. That is why we're seeing that they're maintaining that sell on this one. Other than that, they're saying that the stock has already run up 20% in Q4, and this is despite the weak earnings that we've seen coming in. LTI Mindtree already saw a good run up. Soft Q1 is expected in terms of guidance as well. So obviously that rebalancing factor which we're expecting in terms of inclusion coming in for LTI Mindtree in the Nifty, that's a factor that is already priced in, and that's the word coming in from Citi. So that is why they're continuing to maintain that sell rating. Yes, we are also expecting Q1 to be quite flattish, and risk to the double-digit growth is something that is there. So that is one important factor, and keeping an eye out on my LTI Mindtree today, down 1.9% as of now, Sharon.
Yes, that is LTI Mindtree for you. But let's move on. Let's talk about SBI. Sameet, good afternoon. And SBI, this one also will continue to rule the charts, do you think, going ahead?
Good afternoon. Well, banking has been, sulking a bit since morning. But if you see, SBI has been trading quite firmly. In fact, the entire PSU banking space has been showing some good traction since morning. If we talk about SBI, this stock, cemented its position around 550, 555 a couple of weeks back, and from there we saw a vertical rally in this counter. So the stock is now challenging its important hurdle, and it's a psychological level as well, 600 mark. So once we see SBI surpassing this important mark, we would see extension of good move towards 615, 620, and we are anticipating that to happen probably next couple of days time. So overall, we continue to remain bullish on this counter at current level, and probably after giving a confirmation beyond 600, the stock could give a decent move in the near term. So as a trader, one should keep a strict stop loss around 582, and with a positional perspective, 615, 620, these are the next levels to watch out.
Okay, surely keeping an eye out on those levels for SBI. But let's move on and talk about Hindustan Zinc then, Ashesha. Why is this one in focus today? Stock is, as of now, down 2.9%. What is the reason?
Yes, the stock is declining in trade today. Remember, Hindustan Zinc is a dividend-placed stock. The company declared a dividend of 7 rupees per share, which at the current market price translates to a dividend yield of about 2%. But this is much lower than what the street was working with. And even if we compare the dividend that the company has announced, remember this is the first interim dividend for FY24. Last year, the company had declared a total dividend of 75.5 rupees per share. The first interim dividend that the company has announced is much lower than the street was working with, and that is the reason the stock is reacting negatively to this news flow. Now, Vedanta holds about 65% stake in Hindustan Zinc, and as a result of the 7 rupees per share dividend that the company has announced, Vedanta will get about 1900 crores. Vedanta Resources in turn will also get about 1300 crores. It will probably help Vedanta Resources repay its debt obligations. But largely a negative read-through. The stance of various brokerages is also cautious. Remember, the balance sheet is now bloated, macroeconomic dynamics is not improving, and that's the reason Phillip Capital also has a cautious view on this stock. Today, of course, on the back of this dividend news that has come in, the stock is declining in trade.
All right, so that is Hindustan Zinc for you, and the reason why it is declining in today's trading session. But Harsh, over to you. HDFC Life, tell us why is this one in focus today?
Life insurance numbers for June have come through, and we're seeing that HDFC Life has clocked another strong number for the month of June. So traction on the stock continues. Stock has been on a rally, in fact on a tear. In fact, from March lows, it's up 45%. So a very strong return in terms of where HDFC Life is concerned. But back on the June numbers, you're seeing an 18% year-on-year growth. 774 crore odd is where the individual premiums has come through. The weighted received premiums, as you would call it. And with regard to even Q1 full quarter, that number has come in at just below 1900 crore, 1898 crore. That's a 12% year-on-year growth. This is of course on the combined HDFC Life plus Exide Life, the combined book. Market share remaining as is, 10.5% is where the market share of HDFC Life remains.
Okay, let's move on and talk about CG Consumers on the charts then. And Sameet, when you look at it today, the stock is buzzing in trade. But in the last 6 months, 1 year, nothing exciting in terms of return for CG Consumers. Does today's move indicate any sort of a turnaround for CG Consumers?
this could be a start of some revival in this counter. Yes, stock has been a laggard since last many months now, but it seems stock has formed a strong base around 250. Then we are seeing some early signs of revival, a series of higher highs, higher lows on daily time frame chart. Stock has been consolidating since last 3 weeks, and today we are seeing good traction. So it's on the verge of confirming a breakout from bullish flag pattern. So it's a bullish pattern, and the implication of this would be the stock would surpass 300 probably in the near term. So looking at the current price and volume action, will not be surprised to see the stock heading towards 310, 315 in probably next couple of weeks time. So our bias remains positive as a directional trade. One can keep a stop loss below 280, and the target would be around 310, 350.
Okay, let's move on and talk about the next stock, and that is Balkrishna Industries. This one is in focus because the management met with certain analysts, and there were some key highlights that we got from there. One, in terms of they've highlighted the vision of reaching 10% global market share from the current 5 to 6%. So almost doubling in terms of that. And this is in terms of also the OHT segment, which they mentioned that they've reiterated the medium to long term EBITDA margin guidance of 26 to 28% versus the current 20% in FY23. In terms of the channel inventory, they highlighted that it is still higher than normal, but at the end user demand is holding up, and they expect the overall scenario to start normalizing, and the recovery that will start being seen and will be visible in the second half of FY24. The full benefit of that raw material cost, the lower raw material cost, that should also be visible from the second half of the year. So no price cuts, and in terms of the ad sales and promotion sales, that is something that should start normalizing. Also, the average selling price is expected to normalize at around rupees 300 per kg, as the commodity benefits that gets passed on, and better product mix will come in, so that should aid the average selling price and the margins over the long term as well. So yes, on the back of that, we're keeping an eye out on Balkrishna Industries. As of now, not doing anything exciting in trade, 3%.
All right, but let's talk about a stock that's doing quite a lot.
I think that's the one actually keeping the Nifty today much more in the green.
That is keeping the Nifty afloat in today's trading session, and that is definitely Reliance Industries, hitting a 13-month high in today's trading session. Biggest intraday jump coming in for Reliance Industries since March 31st. Remember, the unit Reliance Retail is said to be valued at around $92 to $96 billion. This is ahead of a possible IPO, and they are also going to cancel the shares not held by the holding company. They've also set July 20th as a record date for demerger of Jio Financial Services, and that, as per Motilal Oswal, that will unlock the value for Reliance Industries shareholders. So yes, a lot of value unlocking act play coming in for Reliance Industries, and yes, nobody is complaining about it. 4% uptick coming in on that stock.
Absolutely, nobody is complaining about it. So surely keeping an eye out on Reliance. 4% is a very good move for Reliance. But let's move on to the next one. And on the technicals, we'll talk about Masgao Dock now, Sameet. And in terms of charts, obviously, we have seen Masgao Dock also see a very good run up. Look at just the chart showing on your screen as well. Since April, look at the up move that we're seeing in last 6 months, 83% return. Masgao Dock still will be a positive view for you, or maybe it's time to actually book out profits?
No, I think one shouldn't be in a hurry to book out profit. Stock is in a strong secular uptrend. It has already given stellar move in last couple of months time, but the kind of volume activity it has seen in this recent rally, so that is encouraging. Yes, in between you would see a bout of profit booking or some sort of time consolidation in this counter, but with a slightly broader perspective, this stock is likely to head towards 1600, 1650. So the near-term projections would be around 1600, 1650. One can reassess the situation once the stock reaches there, but as of now, it's a stay put. Fresh obviously not advisable considering the vertical rally that this particular counter has seen. But as a trader, one should now trail the stop losses higher. 1300 seems to be a very sacrosanct support in the near term, so one can place a trailing stop loss around 1300 and ride this move 1600, 1650. These are the next levels to watch out for.
That is Masgao Dock, and that's Sameet's view coming in on that particular counter, 83% in the last 6 months. But Ashesha, delivery Why is this one in the spotlight in today's trading session?
Well, yes, it is on the back of a brokerage note that has come in from MK. MK, in fact, has initiated coverage on this counter with a buy rating, and they've given a target price of 465 rupees per share. The stock currently trades at 400 levels, indicating a nearly 16 to 20% upside from the current market price. MK, in fact, says that India's e-commerce shipments market should at least double by FY26. As far as the company-specific action is concerned, they expect revenue CAGR of about 24% over the period FY24 to 26. It also expects delivery to report EBITDA margins in the range of 7 to 8%, and it could probably see PAT turn around in FY26. As far as the market potential is concerned, Delivery's cost of production, cost of transportation in the B2C segment is at least 20% cheaper as compared to its peers, and it is poised to ride the long-term structural growth story in the India's logistics space. So that's the view that's come in from MK, where they have initiated coverage with a buy rating and a target price of 465, and that is the reason the stock is surging in trade today.
Let's move on and talk about Orient Electric then. And in terms of charts, how do you see Orient Electric actually performing from here on? Last couple of years, we've seen a bit of a consolidation for Orient Electric. Now, what is it indicating?
As far as this particular counter is concerned, this stock confirmed a bullish breakout on Friday itself. If you look at the volume activity, it has risen substantially. So considering the recent price action, the stock is likely to have some decent move in the near term. So directionally, we have a buy on this particular counter. The immediate target would be around 270. Risk to reward wise, one can buy on a dip probably towards say 252, 250, and keeping a stop loss around 240, 2.40. So the overall structure looks quite promising. Once the stock surpasses its 200-day moving average, we would see a good traction coming in this program.
All right, that's the take coming in on Orient Electric, but let's keep a spotlight on a new listing that's taken place today, and Cyan DLM. What a bumper listing, Harsh. Fill us in with the details of that particular listing for Cyan DLM.
Well, yes, it's IPO season, and some of the stocks that have been listed are doing really well currently. Cyan DLM is the counter, not Cyient Limited. But very quickly, the issue price for the stock or the IPO price was 265. It's listed at a roughly 55% gain. You're looking at a market cap now of around 3,400 crore versus the 2,100 crore market cap at the time of issue, 592 crore raised. With regard to what the money is going to be used for, 291 crore for working capital, debt repayment around 160, and acquisitions around 70 odd crore, and capex of around 43. Its nearest peers, the likes of Syrma, Keynes, have done extremely well, of course. So largely, the stock is in focus. It's a new IPO, and it's done very, very well. So investors rewarded for that.
Absolutely keeping an eye out on Cyient DLM. But let's move on and talk about Maruti. And Sameet, we were all talking about the 10,000 number. It did touch that mark on 5th July, but again below that level now. What is the view in terms of the charts for Maruti Suzuki? What should we be expecting now?
The chart structure is quite robust. We can see a series of higher highs, higher lows in all time frame chart. So yes, as you rightly pointed out, stock has managed to finally surpass the 10,000 mark, but didn't sustain about that. But it's a matter of time. We would again see the stock, reclaiming 10,000 level, and this time probably this particular counter can head towards 10,400, 10,600, which is the next cluster that we are forcing at current level. So overall, the bias remains positive. After a good rally, a breakout beyond 9,700, stock has given a pullback towards its important breakout point. So it would be a good, a buying zone for this counter. As a trader, one can keep a stop loss around 95.20, go long at current level. And as I said, 10,400, 10,600 is at the next positional levels to watch out.
Okay, keep an eye on those levels for Maruti. But let's move on and talk about Sula. Now, this one is in focus after it came out with its operational update. When you see the update that is coming from the company, they've seen a revenue growth of 17% in quarter one. This is the operational update that they've given. And mainly they said that they saw an offtake coming in, an uptick coming in its premium segments as well, and elite wines, which saw an actually good demand trend as well. Obviously, let's not forget it's the largest winemaker in the country. They recorded its highest ever first quarter sales, net revenue overall, as well as its own brands. Both of them saw very good growth, as well as wine tourism business. That's also something that has started seeing an improvement. On a provisional basis, they said that they witnessed a growth of 24% in its own brands and coming in at 103.5 crores versus the previous year, led by the premium category, like I mentioned before. And in terms of the tourism business, that grew by 11% as well. So all in all, a strong update that you can see coming in for Sula, at least, across, whether it's their own brand, outside brands, or even in terms of wine tourism. That's a good uptick, and that is why the stock is buzzing in trade, up 3.8% as of now as well.
Alright, that is Sula for you. That is surging in trade, 3.8% uptick coming in for that particular counter. But Sameet, let's talk about the metal pack. At the start of the day, we did see a very good momentum coming in on most of the metal players. Sale for one, if you look at the way how the stock has moved in the last 6 months, is done actually precious little. 1% uptick in the last 6 months is what sale has registered. Where do you see sale headed from here on? Do you think that the consolidatory phase for this particular company is done?
Looks like the stock is likely to come out of its recent slumber phase. Within the metal space, if you specifically talk about the steel counters, they have been clearly outperforming the entire basket. So Steel Authority is the one stock that has broken out from its recent congestion zone. It is moving in tandem with Tata Steel also. So overall, the bias remains positive, and stock this time is likely to head towards 94, 95, which is the near-term target for this particular counter. As a trader, one can keep a stop loss around 87 now, or target would be around 95. And once the stock surpasses 95, then 3-digit mark, 100, 102, these are the next levels to work from.
Alright, that's the take coming in on sale. But let's talk about Gland Pharma, because this particular counter is seeing a good jump in today's trading session. And this because you have an US FDA approval coming in on a poison antidote for the company. To talk more on the way how the stock prices surged, about 8.5% uptick at the day's highest point, as you can see it on your screen. It's no doubt given up some of the gains, but it's hit its highest level since May 19, and it was the biggest intraday jump that the stock had seen since May 23rd. The US FDA has approved the company's ANDA for a poison antidote, and now the stock, as you can see, is gaining after 2 consecutive sessions of losses. So this particular seems to be very important for the company. The stock seeing a good uptick of approximately 4% right now.
Okay, that is stock number 17 for y'all, and that was Gland Pharma. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.